In this video, we're gonna be talking about what metrics contractors need to be tracking. Hey everybody, I'm Mike Claudio, owner of WinRate Consulting and host of the Big Stud Sales Podcast. If you haven't listened to that yet, I haven't actually asked you to, but jump over to your podcast app, search for Big Stud Sales, give it a download, give it a subscribe. Would love to hear from you on that. It's been a lot of fun growing that as a platform. But today we're gonna be talking about what metrics contractors need to be tracking. This is gonna be a blend of CRM information, customer relationship management tool, as well as sales metrics and as well as financial metrics. Not knowing your client information, your numbers is one of the biggest pitfalls I see in the entire industry. It's amazing how many business owners I coach and deal with and talk to who just, I'll say, well, how many clients did you have last month? I don't know. How much money did you make last month? I don't know. How much money have you made this year? I don't know. If you're that person, trust me, you are gonna be incredibly less anxious, incredibly less frustrated if you know your numbers. So first I'm gonna talk to you a little bit about a CRM that I use. It's a spreadsheet I built out. I'm gonna go through all parts of it, including the sales metrics and the financial metrics that go into it. So one of the key points of any CRM is understanding how to search for it. I use a job number process for everything. In this case, I'm using it as the year 2020 obviously, and then job number 1, 2, 3, 4, 5, and it'll continue to expand from there. I use date contacted as well as different statuses. You'll see in this list right here, I have new lead, quoted, approved, in production, invoiced, and closed. That's what I use. In most like Builder Trend and other ones you can customize, as well as this spreadsheet that I created. I'll say it now and I'll say it again at the end. If you want this information, this spreadsheet document, shoot me an email, mike@winrateconsulting.com, and I'll shoot it to you and we can even go over it if you'd like. But basically, so it starts out job number, then you got last contacted or any type of specific date, status, name, address, company name, because I use point of contact and company name. Like let's say you're working with a property management company or a GC, and you have multiple property managers and or project managers you work with. I want to know the business and who I'm dealing with there. And that helps not just you, but anybody in your company know who's the point of contact on this specific job. Phone number, email address, any notes that might be in there that are necessary for specifically articulating that job, or any special notes that you want to remember later. Referral source is always something I keep track of. I want to know where my top referrals are coming from, who my top referral partners are, what networking groups are providing me the most amount of value. Super important. The second half of this is my financial dollar and date type part of the report. So I have first contacted, amount quoted, date that it was quoted, and I have that because I want to know when the first time I talked to them is and when the quote actually went out. I'm tracking that for my sales guys more than for myself, just understanding how long it takes between those two parts of the process. Amount approved, date approved, amount invoiced, date invoiced, amount collected, date collected. This is just a way for me to keep up with what was the last point of contact, when was the last payment or invoice sent out, when was the last payment collected. It's just a snapshot for me to look at that and understand what do I need to do with that customer, what was the last point, because when you have a lot of customers going on, it's hard to keep up with those individual dates and amounts. So it's super important to have that. So we're gonna move into, this is my sales reporting metric side. So in this case, there's a few key points to this. I track it by status, as you saw in that column, the drop-down box. This way I know how much money, income, revenue, quoted I have in each status. So in this case, you'll see in production, I quoted 101,000, amount of approved so far, that's the amount sold is 53,600, and none of that has been collected yet. Once I move one of those to invoice, which I will later this week, it'll tell me exactly how much has been invoiced, but how much is left to be collected. You can't see it in this report because I don't have anything in there, but it'll tell me how much is in accounts receivable, right? Sometimes you forget about invoices or not sure how much is out there to be collected. And I've seen a lot of people get surprised, like, holy crap, I have $45,000 I need to go collect. Well, this helps me understand what that differential is between how much has been invoiced and how much has been collected. This report down here tells me how many jobs I have per status. This allows me to look at production needs, financial needs, general scheduling. Like if I have a bunch in quoted and not a lot in approved or not a lot in production, I know that like, hey, my schedule is gonna be empty soon. I need to look at that. For me, this is a very much a sales pipeline review of where are my numbers and how many do I have in each status, so I know that I'm guiding people through. Down here I have my WinRate Consulting, success rate, close rate, whatever you want to call it, so I know what percentage of jobs I'm actually closing. My opinion is it should be between 40 and 60%. If it's above 60%, you need to be charging more. If it's below 40%, it's either your process or your pricing. I think 40 to 60% is the right thing, because if you're closing, you have to see people brag, I close 95% of my jobs. Well, then you're the cheapest guy on the block, man. Like, that's not, in my opinion, that's not a bragging point. That means you're just not charging enough. Or you're not getting enough leads. Like, if you're closing 4 leads a month, and out of 4 leads a month, you're not doing that much business. So I think if you're chasing a good amount of business and you're trying to get aggressive with your pricing and you're trying to make money, 40 to 60% is probably the right bracket. Everybody thinks of it differently. That's how I look at it. So then from the financial perspective, this is a financial report, forecasting report. There's another YouTube video specifically on this financial report if you want to check that out as well. But the top here are expenses by job. So this is actual and anticipated. So I'll know the actual as months come to fruition. The anticipated is what I believe is going to be coming up per job. Down here is revenue anticipated. That way you can kind of keep track of what this number right here is. I want to know what my monthly income is going to be. So I can look forward and say, okay, based on current contracts, I'm good. And starting in October, I'm going to start losing money as a business. And I want to know that. So I know like where my shortcoming is, where you might have a big expense, or hey, I want to buy a piece of equipment. When's the right month to do that? Understanding what your forecast looks like is very important. And then this line below that monthly income is anticipated bank account balance. That'll tell me like what my starting bank account is. Let's say right here, we started the bank account in July, so we had spent money without having money, so that was negative. And then as we create money minus expenses, this is what the bank account's gonna look like. So I can forecast and say, hey, even if I don't close business here, which is worst case scenario, I still have money to cover the expenses. So my employees are still gonna get paid, my equipment rentals are still gonna get paid, everything that my insurance, my cell phone bill, all those things I'm still gonna have money to do that based on this report. Up here, this is my profitability report. So this subtracts by job number, what was the income, what were the expenses, what was the profit, what was my gross profit margin. This does not calculate overhead and expenses. This is a per job costing report, because I've asked so many people, hey, like, what's your average profit margin per project, or what was your profit margin on that project? This allows me to uncover mistakes in my pricing. This allows me to uncover where I might be missing things, and this might help me uncover that maybe I can drop the pricing a little bit on some of those projects I really want to win, especially on the bigger ones, because hey, I'm not spending as much, or it's not taking as long as it used to. This is a great way to understand what your per job profit margin is. Those are a few of the things I think are super important. There's obviously others. There's timeliness, there's callbacks, there's employee satisfaction, customer satisfaction. Those are all important. But from a sales and financial, what CRM you're using, those are some of the key points you need to do. From a sales perspective, you want to know how much money you have in what status and kind of your pipeline in production and an invoice, so you understand your accounts receivable. Understanding what your close rate is and what your average job size is also important, so you can see, am I growing, am I scaling? Can I get to my numbers with the average project size I have right now? And then with the cash flow report, this helps me financially forecast, so I know what is my bank account, what is my financial future gonna look like based on contracts I have right now. So if you love this video, I'd love for you to subscribe to my channel, click the bell so you get alerted every time a video comes out. Don't forget to go check out the podcast. Again, if you want this report, shoot me an email, mike@winrateconsulting.com. I'd love to send it to you and even schedule some time to potentially go over it with you. So don't forget, you gotta win fast and win often.